China launches price controls. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of Heise Says US. Grab your stein of coffee. We're going to have a look at this article from Zero Hedge, looking at China launches price controls after red-hot inflation. So inflation is an issue in China as well. Let's start by having a look at the inflation rate in China. It is 1.3%, and well, from the data from 86 to 2021, we can see the highest it was at 28.4, and it's gone, the lowest was negative deflation of 2.20. So we can see here, it's steadily climbing back up. But what's this going to mean with their price controls and red-hot inflation? Let's have a look and jump into this article from Zero Hedge. So update at 10 p.m. Eastern Time. Moments after reporting a red-hot PPI, which was the highest since Lehman, China effectively launched price controls, with China's economic planning agency vowing to increase supply of key consumer goods to stabilize prices, according to a statement on NDRC website on a national radio meeting on Tuesday. So, it was recently approved by the National Development and Reform Commission, the Ministry of Finance, the Ministry of Agriculture and Rural Affairs, the Ministry of Commerce, the State Administration of Market Supervision, Food and Reserves Bureau, and 6 other departments jointly issued and implemented. In order to do a good job of implementation, on June 8th, the National Development and Reform Commission held a national video conference. The meeting pointed out that the Party Central Committee and the State Council had attached great importance to the price control of important livelihood commodities. In recent years, the price control mechanisms for important livelihood commodities has been continuously improved, and remarkable results have been achieved in the work of ensuring supply and stabilizing prices. However, the production, supply, storage, and sale of important livelihood commodities have a long chain, many links, and a wide range of coverage. The characteristics of small production and large market are prominent. In the face of natural disasters, market risks, and emergencies, prices are prone to rise and fall. It is necessary to speed up the improvement of the price control mechanism of important livelihood commodities, continuously improve the ability to maintain supply and stabilize prices, effectively resolve the impact of livelihood commodity supply and price fluctuations on other people's lives, better meet the people's growing needs for a better life, and effectively enhance the people's sense of gain, sense of happiness, and security. Production, distribution, consumption, and other links give full play to the role of government, market, society, etc. Use economic, legal, administrative, and other means to improve the ability and level of price control and effectively guarantee the effective supply of important livelihood commodities and overall stability of prices. Am I the only one that's skeptical reading these type of things, hearing this? Because it's worked so well in the past, hasn't it? The best way to allow the market to adjust is to give the market freedom. But, not something you'd see in a centrally planned economy. The meeting also analyzed the current and future price situation, made comprehensive arrangements for this year's works to ensure the supply and price stabilization of important livelihood commodities, combined with the improvement of the price control mechanisms of important livelihood commodities, and focused on key points such as corn, wheat, edible oil, pork, and vegetables. Promote the effective connection of production, supply, storage, and sales. At the same time, we will actively do a job in the regulation of the bulk commodity market, strengthening market supervision, and making every effort to ensure sufficient supply of important people's livelihood commodities and basically stabilize prices. And now that China is officially setting prices, expect black markets for everything, which the government is micromanaging to emerge, and leads to shortages that will make the current batch of supply chain bottlenecks look like a walk in the park. Well, that's what happens whenever the government intervenes. You get a black market and everything. Okay, guys, it's the people who are calling for rent control, or for this, or for this, or for this. a black market emerges. It finds a way, and it usually costs more. So as noted in the preview of today's potentially shocking China inflation data, moments ago Beijing reported that the CPI came in just softer than expected at 1.3 year-on-year, below the 1.6% consensus, or PPI, or factory gate inflation, came in at a scorching 9% as a result of surging commodity prices. That number was the highest that the consensus estimated of was higher than the consensus estimate of 8.5%, and was the highest since September 2008, just around the time Lehman collapsed. Also of note, the spread between the CPI and PPI growth rates, a metric highlighted earlier today in Gundlach's double line call, rose further and hit the highest level since 1993. Looking at the CPI side, the number came in less than expected thanks to a mute core component which rose just 0.9%, while food inflation tracker rose a modest 1.65%, a far cry from the soaring double-digit food inflation from 1 year ago when sky-high pork prices nuked the food basket. The bigger problem for China is that PPI came in just shy of the record print of 10%. And since CPI remains dormant, it is clear that Chinese factories are still absorbing rising costs rather than passing them on, which means it's only a matter of time before industrial profits plummet. From China's perspective, as long as CPI remains subdued, there is no crisis. As for soaring PPIs, as noted earlier, the prevailing view is that such sharp gains in producer prices are a short-term phenomenon, driven by the restarting of economies and supply chain constraints, although increasingly more analysts are issuing loud warnings that higher prices may become more sustained. It is the concern that the PBOC will sooner or later have to intervene and contain imported inflation by tightening conditions further and or hiking rates. That has depressed local markets and has sent the Hang Seng Chinese Enterprise Index falling for 5 straight days, the longest losing streak since September. In June, the gauge is almost the worst performing global benchmarks, along with the CSI 300 index of mainland listed firms. Meanwhile, the government bond market also started to lose altitude, with the yield on the benchmark 10-year note increasing the most in 6 months on Friday. And while we don't expect any activity from the PBOC for the near future, the big question is, how can Chinese companies pretend all is well before the surge in commodity prices, which is not passed on to the consumers, courtesy of repeated taps from the shoulders from Beijing, see profits, margins plunge and spark yet another Chinese crash. So, I mean, there you go. There's China corporate profits, there's the margins, and you can see China PPI versus industrial profits. So, there you go, everyone. Inflation is shooting up in China. And if we jump here, I'm just going to bring up trading economics, because I want to have a look at the, well, some commodity prices which are quite important. And iron ore, I mean, look at that, everyone. Look at how high iron ore is. It's just going to the moon. It's the big one for Australia, and it's what we're dependent on. And it's one of the inputs in a lot of Chinese manufacturing and construction. And, well, you know, it's good for us Aussies, but not so good for China or for price control. So we're seeing this concern with inflation raise its head more and more all over the world. What do you reckon, everyone? Is it something you're worried about? Or, you know, will China have it under control? As always, thanks for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Aussie Broadband. You can buy merch from Heise Says, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I'll see you next time. Bye for now.